Hey guys, so it's Marcin Drozdz. I'm here at the Keyspire event in Toronto, Ontario, Canada, and I'm super excited to be one of the keynote speakers here at this conference. I'm running the workshop on 6 ways to attract investors on autopilot for your business. Now, whether it's real estate, an operating business, capital is kind of what makes this entire thing run. There's thousands of people here, and I can tell you right now, on the capital raising side, there's really 3 things most people need to learn to be able to raise the kind of capital that you're looking for. The first thing is getting super clear on your unfair advantage and packaging your offer. So in other words, there's a lot of exhibitors here, and there's some do it really well, and others, for the life of me, you have no idea what they do. Why? And it's because they don't package their unfair advantage and themselves as something that is an obvious decision for an investor to want to participate in. 2 is being able to drive investor leads. So the book I wrote, Unlimited Investor Leads, it literally became an Amazon bestseller in my opinion, because one of the biggest weaknesses most people have in business or real estate is the ability to find and nurture new investors to invest in their projects or their ideas. And then part 3, which is going to be the third part of what I talk about, is going to be actually having proper meetings with investors, setting expectations, managing the meeting, having a professional way to leave a great impression with new investors. So those are the 3 things we're going to talk about. I'm super excited about this conference. You know, we got Scott McGillivray here, we got Shaquille O'Neal. He's the headliner. So there's a lot of really cool speakers here, and I'm really excited to be able to share the capital raising side of the business with thousands of real estate investors here in Toronto, Ontario, Canada. Let's do it. What I like about doing conferences at home, I mean, I grew up here, is that you really get more of a Canadian vibe, the Canadian culture. I mean, I grew up with this stuff, right, my entire life. And the biggest difference between Canadians and Americans is that in Canada, everybody has an open mind, but because so few Canadians have known about private equity or even invested in real estate beyond maybe a condo, events like this are just like, people are like, what is this? This is amazing. This is brand new. This is incredible. I can invest in developments. I can raise money. I can do creative financing. Like, so much of this is so new. So I literally trademarked something called the Funds First Formula. Easy stands for exclusive, abundant, scarce, and your allocation. So what's interesting and similar between now and when I got into business back in 2008, is we're in a very similar place where the market's shaky. Most people are nervous. They're worried about the future. They're trying to figure out whether they should be buying, whether they should be holding. There isn't like this exuberance anymore. And it's almost like this cautious optimism. And why that's familiar is back in 07, 08, just before the market was crashing, it was a very similar thing where people were like, okay, it's been good for so long, but like, where do I go with this thing? And I look at it today, where we are in the marketplace, and it's very similar. Let me explain what I mean by that. Number 1, the banks are pulling back. So yeah, interest rates have come down quite a bit in the last little bit, Canada, US, whatever it is, but lenders have also pulled back. So even though money is quote unquote cheaper, first of all, the private lenders haven't made their money cheaper, which is interesting. And the conventional lenders, they have made their money cheaper, but they've made it harder to get. So regardless of what the politicians are saying and all the programs out there, at the end of the day, you'd already have to be extremely well off to qualify for these low rates, high LTVs, all of this stuff. And especially here in Canada, that's the number 1 problem. So very similar things happened back in 08. And actually that was the opportunity for us back then, because it was so hard to get financing, almost impossible. Because we had the cash, because we raised the equity, we were able to get the money in place before we had the deals. We were making killer deals. We were buying stuff for 30+ cents on the dollar. It was insane. And my only regret from then was that 8-figure equity fund I had wasn't a 9-figure equity fund. And if I just put in a little bit more time and effort, and I was a little bit more aware in my 20s of what I had in front of me, that would have been the move. Now today, going into my 40s here, this time around, when this type of correction occurs, and I believe we're due, we're going to be coming to the market with a lot more, as we call it, dry powder, a lot more capital, a lot more investors that are, committed to the process. And I think that's going to be the important piece here. Now, the question is, if you've never raised capital or you've only raised money from friends or family, you might be wondering, okay, but that's easy for you, Marcin. You've been at this for 20 years. How do I do this? After 2 years or 3 years of experience, maybe I got no experience, but I happen to own a rental property. Like, how do I put myself in a position where people want to invest with me, or I can invest with people that are doing bigger things? And the answer is packaging your unfair advantage. So literally this book, Unlimited Investor Leads, I'm carrying it around with me because I'm going to be talking about it at my talk later. But ultimately, the thing that's going to differentiate the people that are sitting on the sidelines, either by choice or by sheer necessity, and the people that are actually doing deals in the next little bit, are going to be the people that can raise the cash. And how you're going to be able to raise the cash is through your unfair advantage, because by being able to demonstrate to people that you are the bison going through the storm, so to speak, where you see the opportunity, you see the crisis as an opportunity, as opposed to somebody who sees the headlines and sees the news and thinks, oh man, the market's going to crash, let's wait 3 years or 5 years. No, that is the exact wrong time to look at things. So look, obviously do your due diligence, work with the right people, have the right teams, but I can tell you that none of those things that I just said matter if you don't have the cash.